Hey, so we had a lot of feedback from the previous video on USDC. If you guys want to check it out, you guys can see the previous video I made. TLDR, it had something to do with Genesis facing a bunch of losses with 3 hours capital, and apparently Genesis is actually one of the trusted partners of Circle. You don't believe me? Let's go ahead and see a TLDR. Let's go on Circle and let's go ahead and scroll all the way down to the bottom and we go to banks. Once we go to these banks, let's go ahead and check out the solutions for the banks. Well, if we scroll down just a tad bit and we see optimize cash and liquidity. Okay, this is cool. Allocate excess funds into a short-term interest rate products that are fully secured. Da, 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 da. Our partner is Genesis Global Capital, a full-service digital asset trading firm. What the snap? Genesis Capital? The same guys who faced hundreds of millions in losses for 3AC? Okay, that's awesome. If you guys want to check out the other details on that, just check out the previous USDC video. Now let's go ahead and get into TUSD. TUSD. Money for the new global financial system. Wow, lots of buzzwords. This is fun. TrueFi, TrueFX, Future Finance, borrowers, lenders, DeFi protocols. Oh, stablecoins. Awesome. That's what I'm looking for. Let's go ahead and learn more about these guys' stablecoins. Specifically, I want to go ahead and check out TrueFi. So, just for the sake of this video and trying to keep it short, let's go ahead and check out TrueFi. This is a little chart on how the lending protocol works. So you have the lenders who give out the stablecoin loans in a pool. This loan actually goes to the borrower and hopefully the guy will repay it. If not, you're basically roasted. And if not, the true stakers are going to be responsible for this. But there is something I want to look into this. Who is TrueFi using and who are they lending to? Is it safe? Is it a concern? So I went to Dune Analytics. Dune Analytics has its own dashboard for the TrueFi DAO. And I was like, I wonder who they are lending out to. They got Fulvang, they got Alameda, they got Amber Group, and I was like, whatever. And then I was like, what the snap? There's Celsius Network. They lent out 8.4 milli. Okay, whatever. So let's see what else. Maybe. Oh, wow, nice. 3 Arrows Capital. Okay, that's cool. Good to know. So they did 3 Arrows Capital. They did Celsius. Oh, and they did some more 3 Arrows. Okay, good. Hopefully that's not under. Oh wait, it is underwater. Oh, Babel Finance. Oh yeah. Yeah, they had a problem too. Man. Maybe they should have picked some better lending. Oh yeah. Great. Another 48 milli at Celsius. Another 12 milli at Celsius. Okay. Maybe it'll come back. But anyways, that's outside of the point. That's okay. I mean, a little bad debt's okay here and there, right? Especially if they have the TRU stakers, compensating for it. I mean, it's awesome. I mean, they have the secure asset fund for users, the SAFU. Because these guys' funds are SAFU. Because they lent out to Celsius, they lent out to 3 Arrows, they lent out to Babel. The ones that lost a bunch of money from the previous little domino debacle with 3 Arrows. But hey, it is what it is. They have the secure asset fund. This is really good. If you read through this, the TLDR on this is at the end of the day, worst case scenario, the TRU stakers are basically going to be roasted. They're going to be diluted in order to compensate for this. So the TLDR on how this works is that in the event of a default, up to 10% of the TRU tokens are slashed from the staking pool. So if you got $1,000 staked in there, $1,000 worth of TRU, whatever you want to call it, you're basically slashed 10%. So you now only have $900. That's not saying that the token's going to hold its price. I'm sure it will see a nice decrease. Not financial advice, of course. Just throwing that out there. Now, if the current SAFU funds are insufficient to cover the defaulted loans, the SAFU can sell the TRU for a respective borrowed asset at its manager's discretion. So that means there's additional sell pressure to the TRU token holders. That's too bad. Maybe they got compensated for staking the TRU. Oh yeah, they did. Users can provide liquidity and earn some rewards on SushiSwap. Nice. And they can also stake TRU in TrueFi to earn TRU. Well, where's that TRU coming from? Oh yeah, it's diluting the other token holders of TRU. Okay, what a great system. But the good news is that Trust Token will always be learning. They'll be well. I mean, the wellness is more than a gym membership. Enjoy our in-office gym, meditation room, and wellness reimbursement? No way. We can recharge wherever we need. They even have everything covered. They give 100% covered medical insurance, and they even celebrate culture. I'm just ready to work here. Let's go and move on to the next one. Let's go and go over a couple of things on USDC. The very first thing we need to go over, because this is a centralized stablecoins, is the attestation reports. And as you guys can see here, they have several different ones, and let's just pick a random one. And I'm just going to go ahead and select January 2021. Blacklisted, basically the TLDR on what this means is that the tokens that were in this wallet have been halted. So in this scenario, this user who had 100,000 in USDC, I don't know what happened in this situation. It could have been a reported hack. Either way, the point is that the tokens can be blacklisted. When this happens, they're frozen and you cannot do anything with them. I'm not saying this happens commonly, but this is just one of the flags that I want to point out for USDC. A lot of people like USDC for its transparency. As you can see here, the US dollars held in custody accounts amounts to over 6 billion. And then right up here, the total USDC supply, you can see it's almost about 6 billion. And then adding up these blacklisted and the unissued tokens, you also come out to about this total US dollars. So these are equal, which is a good thing. And if you want to see who did this audit, this was actually through Grant Thornton LLP. This is a pretty reputable firm, which is always important to have because you don't want these like mom and pop shops who can just, yeah, you got all the funds on, oh, how much did you, oh, okay, cool. And basically get paid off to write whatever they want on there. So they're more inclined to actually be truthful in what they say. Now, I will say, going back to another one of their reports, it would be great to have a little more clarity on where these funds are. Instead, it says the total fair value of the US denominated dollar assets held on behalf of US holders is at least equal to this. It says US dollar denominated assets. So this does not mean it's cash. And actually, if you go over here on another article with Circle is the main company behind USDC, you can see they have 11.6 billion in cash. Now this is great and all, this is awesome, but there's over 50 billion USDC stablecoins in circulation. So if there was, I don't know, 12, 13 billion different tokens that wanted to be redeemed back for cash, then you can have an issue of a liquidity crunch. And typically with situations like this, if the funds aren't there or if they aren't liquid, they are unable to redeem and get their balance back. As you can see here in one of their statements from Circle, it clearly states right here, we reserve the right to change, suspend, or discontinue any aspect of the USDC service at any time. And you skip down and it says decline to process any issuance or redemption without prior notice and may suspend your use of one or more USDC services. You guys get the point. Basically what it's saying here is we reserve the right to turn off the mint and redeem function at any time that we want. This is something you guys need to keep in mind if you're holding USDC. There are some other alternatives. This is what you need to understand with stablecoins. Stablecoins are not meant to store wealth. They are just for a short-term trade. So if you're looking to be in cryptocurrency, your goal at the end of the day is not to keep your wealth in stablecoins. This is not financial advice, of course, but the whole point in going into cryptocurrency is to get exposure to an asset class. That's if you're coming into crypto. It's not just taking fiat from the real world and bringing it into stablecoins or a decentralized manner. Keep in mind, a lot of these stablecoins that people think are decentralized or permissionless, they really aren't. Just like I showed you the terms and conditions with Circle, I also showed you some potential bad debt that could be in the system or even a liquidity crunch that can happen. These are just things you guys need to keep in mind. Second thing with stablecoin, it's good to diversify between a group of stablecoins. That way, if one stablecoin goes down, you don't lose everything. You will have it in different baskets. That way, if one fails, you still have one that works. Third, if you have exposure to the token, know where your risk factors are and monitor them closely. Nobody's going to be perfect. Nobody's going to be pristine. But in these type of scenarios, you need to know your risk factors and manage your risk. These could be like limiting redemptions. This could be bad debt. This could be excess lending of treasury assets. You name it. Centralized or decentralized, you need to look into these protocols or these systems like a bank. Remember how these systems work. Collateral, this could be like Bitcoin, Ethereum, this could be fiat or even other assets are deposited into these systems and stable coins are issued in return. This works centralized or decentralized. If a bank is insolvent or doesn't have your money, then I hate to break it to you. Your money is not there. So keep these in mind and understand your risk factors with these different systems. Now let's go and go over another one. This is Paxos. Now Paxos has a couple of stable coins. It actually has Pax, which is now called USDP, and it has BUSD. These are the two stablecoins pegged to the dollar. They also have a gold one as well. BUSD is the same thing. It's just Binance's version. So if you guys didn't know, Paxos, actually right here, as you can see, has a partnership with PayPal, and they are also regulated in the United States. They also run the exchange called itBit. This is mainly built for institutional traders, as you guys can see here, but this is just something to note. So let's go into this USDP token. The USDP token is similar to USDC. It's redeemable one-to-one, it's regulated, and the difference between USDP and USDC is that most of the assets are held in cash and cash equivalents. This was the latest attestation report. It was almost $1 billion USDP, and they had almost $1 billion in assets. These are in US dollars, as well as US-backed treasuries for USDP token holders. As of May, 96% of the treasury assets are in cash. So this is something important to understand. That way, if people were to redeem 96% of all the USDP tokens, it would be there. Whereas the other 4% is in short-term US treasuries, which these could be like bonds. With them is the accounting firm behind this audit, which is actually a pretty reputable firm. So one of the main reasons why I like USDP over USDC is that most of the assets that it has are in cash. Second, they aren't linked to any of the firms or funds that are a bit underwater from the recent fall with Three Arrows Capital causing others to fall as well. I also like that in their terms and conditions, they don't lay out and say, hey, at any given time, we can turn off the redeem and mint function, which is an important fact because if you can't redeem it, well, then there is no stability in it, which is something important to understand. Bank of America, Coinbase Ventures, Founders Fund, and FTX invested in these guys. So they have a little bit of funding with them. And like I mentioned to you guys, these guys are also partnered with PayPal. So kind of cool. These guys actually have some pretty deep roots. The next alternative I want to talk about is GUSD. This is the Gemini dollar. The Gemini attestation reports for the GUSD dollar are through BPM. This is a pretty reputable accounting firm. I'll leave a link in the description below so you guys can check out their LinkedIn as well as their website. So going back to GUSD, the funds that are deposited in order to get issued GUSD are stored in different forms. They are either in US dollar cash portions or in short-term treasury assets. This is important to understand because both of these are backed by the US government. So always having that one-to-one backing is important to have. That way, if there is a run that says, hey, look, I want to exchange my GUSD back for my cash back, and the assets are there, they will be able to cover it. This is also Cameron and Tyler Winklevoss's company. These guys were early Bitcoin investors, so they do have a lot of capital behind that. Now, there is one thing that I want to point out with GUSD is this part. Pause, block, or reverse token transfers in response to a security incident. Now, it's one thing that it's a security incident, but still, It's the ability to pause, block, or reverse a transfer. This is not the ethos of cryptocurrency, but still, this one, in my opinion, is a little more transparent, as well as USDP compared to USDC. Now, GUSD and USDP compared to USDC, in my opinion, is a better alternative. The reason being is that USDP and GUSD do not have that clause that says, hey, we can decline to process any issuance or redemption without prior notice and may limit or suspend your use of one or more USDC services at any given time. That is important to understand. And also, like I showed, with the potential of the liquidity crunch of the cash on hand and exposure to someone like Genesis Trading. And remember, stablecoins are not meant to store your wealth. They are used for a means of transfer. They're not meant to be held long term, in my opinion. If you guys are dabbling in stablecoins, remember, what's the ethos of Bitcoin and cryptocurrency? It's trying to create an asset that is unable to be inflated or printed away. And if you're going to the dollar, well, I mean, why not just hold the dollar? So just things to keep in mind. Let's go ahead and hit you guys with a wisdom one-liner. Proverbs chapter 13, verses 16. All who are prudent act with knowledge, but fools expose their folly. Be wise. Think about what you're doing before you actually do it. Wow. So if you guys lost your shirt on some of these stable coins, I mean, the biggest thing to understand is that the biggest mistake you can make with a mistake is not learning from your mistakes. If you guys enjoyed this video and if it brought any value to you guys and some clarity on stablecoins, make sure you guys smash up the like, subscribe to the channel, hit that bell notification. That way you guys are notified every time I make a new one. And I'll be making some more videos on stablecoins as well as some other topics in the crypto markets. Yes, I listen to you guys on Twitter. I will be making a video on how to read different smart contracts as well as look for different projects in the bear market. I haven't left you hanging. Videos are coming soon. See you guys in the next one.